Welcome to another trade recap where I'm day trading S&P futures on an Apex evaluation account. You can sign up for your own Apex account with my link in the description and use my coupon code for 50% off your first month and 50% off all recurring months. I'm back from an amazing honeymoon and feel so refreshed. I'm completely over the disappointment of blowing up my funded account 2 weeks ago, and I'm actually a little glad that it happened, as not only did that experience help me create my new risk management rules that I'll share in a little bit, but it also gave me a much needed break from day trading. Not trading the past 2 weeks has helped me internalize the fact that the markets will always be there, and there will never be a shortage of profitable trade setups, so there's just no need to have any FOMO. I thought I'd be antsy to get back to trading, but in fact it's the opposite. I feel more patient, and I'm ready to only take trades off good setups, and feel like I'll be less susceptible to FOMO and till trading this time around with my new risk management rules, but only time will tell. I realized that my biggest trading psychology hurdle is not being able to fully accept the maximum risk of each trade, as getting stopped out usually caused emotional pain. To help me work on better accepting the max risk of each trade, I've made the following adjustments to my risk management rules. First, I'll be risking at most $300 per trade, and instead of adjusting my stop loss levels to meet this requirement as I had done in the past, I'll keep my stop loss levels based on the trade setup and instead switch to micro futures instead of minis so that my max stop loss does not exceed $300. Next, I'll no longer be adding contracts after my initial entry or adjusting my stop loss levels mid-trade, as these just skew the maximum risk of each trade, which I had already accepted before my trade entry. Lastly, I'll set my profit targets at the closest fair value gaps or liquidity pools while maintaining at least a 1-to-1 reward to risk ratio. If I'm in multiple MES contracts, only if there's AD confluence, I'll leave runners to hit more aggressive profit targets with their stop losses set to break even. As I become more comfortable with ICT trade setups, I'll go for more trades with better reward to risk ratios, but for now while I'm still learning, I'm just going to go for the low-hanging fruit as he calls them. Luckily, Apex just had a very timely 80% off sale off all evaluation accounts, which I posted about in my community page, so I opened a few new 50k accounts. I'll be trading one of them responsibly and posting trade recaps on this YouTube channel, and the other two are open just for the FOMC volatility strategy that I did end up trying today. Stay tuned for the results later in this video. But first, here's a trade that I took before the FOMC minutes release. This was my second trade of the day. I forgot to record the first one, which was a small win. After seeing some bullish divergence form on AD, I find an old fair value gap that was also supported by the negative 0.272 fib extension and decided to try a long entry. Since my stop loss was only 5 points, I decided to go with an ES contract since this was under my $300 max stop loss limit. After entering, price drops down and starts heading towards my stop loss. I briefly considered closing the trade early, but decided to let it stop me out to practice fully accepting the max risk of the trade. I'm glad I decided to stay disciplined, as it misses my stop loss by a few ticks and starts to rebound upwards. I do decide to slightly lower my profit target to a closer 3-minute fair value gap, which still maintained above a 1-to-1 reward to risk ratio. And sure enough, price does start pumping and I get rewarded for my patience and get a nice 6+ point scalp. So after successfully passing an Apex evaluation account using the initial spike of the last FOMC minutes release in September, I decided to try it again for this one, this time with two 50k accounts. Check out the video card to see my full tutorial on how this volatility strategy works. On one account, I set my max 10 contract buy stop order at 38.60, and on the other account, I set my max 10 contract sell stop order at 38.42. I figured these were both far enough from where price was trading right before the minutes release to protect against slippage. My automated take profit orders were set at 8 points for both the buy stop and sell stop orders. Upon the minutes release, the initial spike was upwards this time, and even though TradingView and NinjaTrader both lagged, my buy stop order got filled and almost instantly hit the 8-point profit target on the way up, bringing my account balance above the evaluation profit target. I quickly canceled the sell stop order on the second account just in time before price dipped down into it, and waited for price to start pumping again before market ordering into a max-sized long entry to catch another large move to the upside. Not gonna lie, I definitely got lucky with this long entry on the second account, and would not advise chasing like this since the strategy is really based around the initial spike, which had worked beautifully on the first account. But in any event, the volatility strategy was a huge success this time, as I was able to bring both 50K evaluation accounts above the 3K profit goal in a single trade today. I'm super pumped that I passed 2 evaluations today, but still need to hit that trading day requirement on them before they become funded accounts. So in the meantime, I'll still be trading the evaluation account I showed in the first trade and posting more YouTube recaps of responsible trading. On this evaluation account, I made a total of $542 today, bringing my account total to $50,637. With my new risk management rules in place, I'll be trading more micro contracts, and as a result, won't be making as much profit as I would with mini contracts. But on the flip side, I also won't be losing as much. This should hopefully help with preventing tilt trading and preserving capital, which is really the most important aspect of being a consistently profitable day trader. After a 2-week break, I feel refreshed and have a better trading headspace. I'm excited to get back into it and hope y'all are ready for some more quality trading recaps. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe to follow along as I make another attempt at passing a 50K evaluation account with better risk management this time around.